CNBC.com now.
Imagine.
Everyone wants a smooth running home so that they can spend more time enjoying it. The British Gas app allows you to do just that, because with the touch of a finger, you can quickly submit meter readings or book an expert engineer, leaving you more time for watering the borders or a spot of sunbathing. Manage your home account and more, all in one place. Download the British Gas app from the App Store or Google Play today.
Chloe, is that you? Still lugging that old laptop round your lectures?
No, my name's not Chloe, it's Claire.
No one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its light-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trading qualifying criteria and evaluation.
For our half-price sale on a choice of floors and beds. For first-class free fitting. For kicking your heels off. For overexcited kids. And pets. For thrills and spills. For a special welcome home. Carpet Right for life. Offers end Tuesday. Free fitting on selected carpets and vinyl with selected underlay. Minimum spend applies.
First world problem number 346.
Well, you know, people might think I'm exaggerating, but since Virgin Atlantic announced their sale, I can't sleep. One minute my head is in New York, the next I'm searching for shows in Vegas. I can't stop. So many choices. South Africa, the Caribbean, California. My search history is a total mess. Oh, I might need to bring it up with my life coach.
Seriously? Get a flight. Bing bong. The Virgin Atlantic sale is now on. Visit virginatlantic.com and fly direct from London.
Hot day today. McFlurry time. Oh, but which one? Twix or Mars McFlurry? Come on, decide.
The Twix and Mars McFlurries are now at McDonald's. A deliciously difficult decision. Only 99p for mini and $1.39 for regular. Served after 10:30am, except in selected restaurants, which will serve this from 11am. Participating restaurants only.
20 seconds left for final trades. Brenda, what do you got for me?
Salesforce company just reported a great quarter. $13 billion of recurring revenue. We like it.
Saperstein.
Home Depot, no exposure to China, growing. New development in America, that's the name.
The doc.
QD, unusual activity.
Weiss.
I think Zogenix is bottomed here.
Lamb Research.
All right, great stuff. Good to see all of you.
Thank you.
The exchange begins now.
Thank you, Scott. Hi, everybody. Here's what's ahead today. An end of summer rally as the president says talks with China are now at, quote, a different level. But with tariffs looming, is this yet another head fake or a true breakthrough the markets can trust? We'll debate that. Plus, value is king. The discount stores have been a bright spot in retail this year. We're going to look at two standout plays in that space that are headed two different ways today and how investors should play that. And we'll hear why one analyst says Disney Plus could be a much bigger hit than even Disney is expecting, and what that means for Netflix and the rest of TV. That and more ahead in Rapid Fire today. But we begin with the markets, and Seema Modi is here with those numbers.
And a big day on Wall Street. Here's where we stand at 1 p.m. Eastern. Kelly, the Dow currently up 349 points. While the U.S.-China trade war has escalated in recent weeks, you could argue that in the last 48 hours, the tone has changed. China today saying that it remains in touch with the U.S. on trade and that it also suggested it won't retaliate against the latest tariff increase. We were up 361 points at the highs. We're currently up 345 and up 3% for the week. Here are the two sectors contributing to the move that we're seeing in the markets right now. First, it's tech. A lot of semiconductor names that had that high exposure to China, Nvidia, Micron, and even Apple shares up about 1.5%. Let's also pivot to the industrials, one sector that has really been hit by the ongoing U.S.-China trade tensions. A number of these companies have also been mentioning the competitive pressures that they're facing on the ground inside China, like Caterpillar, like 3M. But as you can see, these shares of these major industrial giants are higher, and the airlines playing a big role today, too. American Airlines up 4.5%. The industrial sector now up 3.2% for the week, on track to break its 4-week losing streak. Kelly?
All right, Seema, thanks. And welcome to the exchange, everyone. I'm Kelly Evans. Revised GDP for the second quarter dipping slightly to 2% today, but consumption was even stronger than first thought. Overall, GDP grew 2.6% in the first half of the year. Pending home sales did come in weaker than thought last month. They dropped 2.5% versus the unchanged reading that was expected. And the Treasury Secretary, Steven Mnuchin, saying that ultra-long bonds are under very serious consideration right now, while a J.P. Morgan survey finds investors would prefer a 20-year note to a 50 or 100-year bond right now. Let's drill down on these markets some more with Bob Bassani. He's down at the New York Stock Exchange. Robert?
Yes, and you saw from SEMA there, all the beaten-up sectors have been rallying the last 2 days. So semiconductors, transports, energy, banks, these are all beaten up on the month. Last 2 days, they've been rallying. But no one has much confidence that all this is going to last. The market is stuck because traders can't figure out what the earnings outlook is going to be like for the next 6 months. Earnings are looking flattish for the year. We've been saying this for months now. Up or down a couple percentage points. You see that? That's flattish for the year, folks. Maybe 2%. But there's not a lot of confidence in these future estimates because of all the uncertainty. First and foremost, importantly, around the direction of trade and tariffs. What's going to happen with that? Second, around the stability of Europe and the Asian economies independently of tariffs. And finally, on what the right central bank policy response should be to weaker growth. It's not clear that just cutting rates ad infinitum is the panacea. What everybody agrees on is that without a meaningful trade deal, we're essentially stuck in a trading range. Now look at 2020 earnings, for example. Who knows what's going to happen there? We get a trade deal, maybe we can go up 10% in earnings, and the markets are going to certainly rally on that. You don't get any trade deal, well, we could have no earnings growth in 2020. That would be a tough call for the stock market, for prices. A big global slowdown or even a recession, forget it. We could be down 10% or 20% in earnings, and that, Kelly, is fairly typical in a garden variety recession. It's not unusual to see a 20% drop in earnings. In other words, a lot of uncertainty. Back to you.
Bob, thanks very much. Bob Bassani. The Dow and the S&P are on pace now for their best weekly gains since the first week of June. This after China says they want to resolve the trade war with a, quote, calm attitude, and hinting they don't plan to retaliate for our latest tariff hikes. Should investors take this as a true turning point heading into the fall? Joining me now are Gregory Dacko, Chief U.S. Economist at Oxford Economics, and Janet Johnston, Portfolio Manager at TrimTabs Asset Management. Great to have you both here. Janet, you're quite bullish on the Chinese consumer, at least. What do you think happens with these trade talks?
Well, it's hard to tell if they're going to escalate or if things will continue to be calm, and which is what we hope. There needs to be a resolution. But what we've seen in both the U.S. and in China, the U.S. consumer has been on really solid footing. What we've heard from companies is that the Chinese consumer has continued to deliver. I think some of the old statistics, the macro statistics coming out of China, reflect more of their industrial economy than their consumer economy. Okay. And so the messages we're hearing from companies are a little bit different.
So you would stick with companies like Alibaba, those with the Chinese consumer exposure. Well, and does that mean for the U.S. companies with that exposure, Starbucks and the like, that those trends should continue to do fine?
Well, China is the growth engine for Starbucks. The U.S. is steady, but their comp store sales were up 6%. I think their stores are growing 16%. If you saw the Costco video that went viral yesterday, that gives you an indication of the pin-up demand for high-quality U.S. products. Sure. Costco was very smart. They put some of their signature products on Alibaba for a good bit of time before they opened that store.
So trade war or no trade war, that's one way to play all this. Greg, there's the president tweeting again today after the GDP numbers, saying the economy is doing great with tremendous upside potential. If the Fed would do what they should, we are a rocket upward. What do you make of all that and this back and forth right now between the pressure on the Fed to lower rates and their sort of long discussion about whether to continue to do so?
I think the president in general put a little bit too much lipstick on this morning's GDP report. We have growth that's currently trending at about 2.3% year over year. That's a significant downgrade from where it was a year ago when we were growing above 3%. we've seen a number of headwinds coming from the global environment that's weakened quite tremendously. We've seen the erosion on business investment from lingering trade uncertainty and from additional trade tariffs, and now we have business investment that actually contracted in the second quarter, and it's not looking much better. Yes, there is some encouraging news coming from China that it's willing to negotiate and that it doesn't want further escalation of trade tensions, but I don't really buy that. I think what we're going to see going into 2020 is further tensions between the two nations that will continue to erode private sector confidence and weigh on business investment.
And there's been pressure on the Fed to respond to that. Bill Dudley wrote earlier this week that they shouldn't. They should basically let the president take the political hits that come from that. Larry Summers was on our air today responding forcefully to what Mr. Dudley, the former New York Fed president, wrote. Take a listen to this.
For a trusted former official of the Fed whose thinking is inevitably going to be tied to the Fed, to recommend that they raise interest rates so as to subvert the economy and influence a presidential election is grossly irresponsible and is an abuse of the privilege of being a former Fed official.
And Greg, this was so striking because Larry Summers is no big fan of the president, so his criticism carries a lot of weight here, doesn't it?
I think the op-ed by Bill Dudley was not only misguided, but very naive. Having, at this juncture, a statement saying that the Fed should influence the elections by essentially going along with the Trump trade tensions and accommodating these increases in tariffs is completely misguided. I think the argument that Trump would react differently if the Fed were to essentially loosen monetary policy is naive. I think the argument that the Fed needs to remain independent and as such should essentially go along with this tariff is also misguided, and push back against further accommodation is also misguided. The economy is at a point where it is weakening, where global headwinds are influencing the economic pace of activity, and in that environment, the Fed should react and should prevent a further tightening of financial conditions and therefore loosen policy.
You guys think one more rate cut, two more? What's your call, real quickly?
We actually have three more rate cuts, September, October, and December.
Okay. All right. We'll see. I know the market's headed your way. Thanks, Gregory and Janet, very much. Appreciate it today. Gregory Dacco and Janet Johnston.
Thank you, Kelly.
Turning now to retail, Best Buy shares are down more than 8% after mixed results today. The company saying all the proposed and implemented tariffs affect about 60% of their cost of goods sold. For more, I'm joined on the Newsline by Michael Pachter. He's a senior analyst at Wedbush. And Michael, why do you think this disappointment was so striking? What is it telling us about the tariff landscape?
You know, I think Bob Pisani said it really well a few minutes ago. Investors just don't know what to do. They don't know where tariffs are going. They don't know how manufacturers are going to respond. They don't understand the supply chain and how quickly manufacturers can shift production elsewhere. And, you know, so you look at Best Buy shares, look at the price. It's been as high as 80 and as low as 50 in the last year. We're kind of settling in the middle, which is telling you investors just don't know where things are going. And poor Best Buy, they don't control very much of the supply chain. They control their private label stuff, which is maybe 10% of sales. Accessories are 10% of sales, and that's all China. And then a big chunk of consumer electronics, you know, phones and TVs and computers are made in China. So they can't control it. They're going to very likely have to raise price. That's going to dampen demand, and it's going to kill margins. So I think the guidance is right, and I think management threw their hands up and said, we don't know what to do.
So what conclusions should we draw about the impact these tariffs are going to have, Michael? If this was one of the best performing stocks throughout the whole transition, you know, as Amazon came to cannibalize their ability to execute has been phenomenal. What should the company be doing, and what should investors do with the stock?
You know, this is a good management team, and I had to sell on this thing for years because I was convinced Amazon would put them out of business. They've been really astute, and I've been quite surprised at how many consumers remain who just don't want to shop online. Best Buy is the destination for those consumers, and I think Best Buy has been super consumer friendly in kind of creating solutions for smart home, helping people connect everything. They're going to continue on that path. And I think they probably have another 20 or 30 years until that generation of consumers dies out and our kids who do everything on their phones replace them. So they're going to be around for a while. And what they're smart about is they're returning all their cash generated to shareholders. Their share count keeps dropping, which means on flattish revenue, they can keep growing earnings. And that's what we're seeing. So it's not a value-less stock. There's real value there, and it's a really good management team.
Okay.
It's just hard to put a premium multiple on it.
You have a $71 price target, a hold rating. The shares are just under 63 today. If Best Buy is going to struggle to do sort of as well as you've described, is there anyone you downgrade to a sell, given what they've just told us?
I think the market's telling you that, they're going to make about $6 and it's worth probably a 10-ish multiple because of uncertainty. And, if tariffs get more severe, I have to rethink whether they can earn, that kind of number. If tariffs go away, I've got to rethink whether they're going to earn a lot more. So let's see what happens with tariffs.
Yeah, and aren't those the truest words in the market right now? Michael, thanks very much.
Thank you, Kelly.
Michael Pachter from Wedbush on Best Buy today. Here's what's still ahead on the exchange.
Coming up, King Dollar. No, not the currency, the retailers. A look at how deep discount stores are winning over customers and delivering for investors. Plus, one Wall Street firm says Disney is underestimating how big its streaming service will be. And there's a tariff tug-of-war going on. Not just between the U.S. and China, but between companies here at home. This is The Exchange on CNBC.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings and things. Strings and things. Strings and things. Strings and things.
Now there's a whole range of strings and things called Strings and Things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
From the moment I saw you, the last of the litter, I knew you were the one, and we'd soon hear the pitter-patter of tiny paws on our kitchen floor and tiny scratches on the bedroom door. You might sometimes be mischievous, sometimes be shy, but I know I found love in those kitten cat eyes. Join the free VIP Kitten Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/kitten club or join in store. T's and C's apply.
At Tesco, we can pop our pasta in your Astra, our Red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try Click and Collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Everyone wants a smooth running home so that they can spend more time enjoying it. The British Gas app allows you to do just that, because with a touch of a finger, you could quickly pay your bill or book in a boiler service, leaving you more time to fire up the barbecue or just relax with a good book. Manage your home account and more all in one place. Download the British Gas app from the App Store or Google Play today.
Welcome back. It's a big day for discount retail today. Dollar General is surging to a new high after a blowout quarter. Dollar Tree shares, meanwhile, are lower after the company missed earnings estimates. Both companies still beat on same-store sales, though, and are raising their full-year guidance despite the threat of tariffs, and in contrast with what we just talked about with Best Buy. For more, I'm joined by Rupesh Parikh. He's an analyst at Oppenheimer, and Lauren Thomas is our retail reporter for CNBC.com. Great to have you both here. Rupesh, I'll just start with you. How can these stores be executing so well when Best Buy is faced with such profit margin pressure?
Yes, as you look at the retail landscape, you continue to see consumers migrate towards more of the value and convenience channels. And I think Dollar General and both Dollar Tree offer significant value. So I think you continue to see that shift within the retail landscape.
Going the other way today as well is Ollie's, which just had been one of the best performers this year and now is down 32% in a month. Is Ollie's not executing well, or are they facing a unique challenge that tells us anything?
Yeah, so Ollie's I don't formally cover. I think with the dollar stores, just Dollar Tree, you saw a 4% comp. I think it is really largely driven by the company initiative. So the management team at Dollar Tree has really embarked on a number of initiatives to really accelerate that business. So I think it really speaks to the strength of the management team and execution versus some other macro factors out there.
Oh, sure. And Lauren, that's what makes this so striking right now. You know, these companies were one of the first to be mentioned as feeling a direct tariff hit. The profit margins would shrink. So many of the products come from China. And yet Dollar General's earnings were almost 25 cents better than expected, and their revenue came in $100 million higher than expected. Whoa, it's quite incredible.
I think, and to go back to the Ollie's point quickly here, I think that spoke less to weaknesses in the entire industry. I think that was more of a one-off thing. The CEO actually came out and said on the earnings call, we actually might have gotten too ahead of ourselves in opening stores, so maybe they were too aggressive there. They actually were one company to take advantage of the opportunity with Toys R Us going out of business. They went in and took more than a dozen Toys R Us stores and moved into those. So maybe they realized, or what they said was those stores ended up cannibalizing some of their existing stores, so might have gotten too ahead of themselves. But back to your question, yeah, I think overall what we continue to see and what I cover a lot of is the separation of whether you're at the mall or are you off mall. A lot of the, Dollar General, Dollar Tree, Five Below, Ollie's, all obviously off mall.
Yes.
And it's the department stores, the inline specialty apparel retailers that continue to struggle.
And the value plays, Rupesh. It's interesting. I mean, we've talked for years about TJ Maxx and that cannibalizing the department store and obviously the trends there. Walmart, another great example of a company that has always put value first and is seeing those efforts pay off. So when people look at the tariffs that are coming in September and in December, is that going to be tougher sledding from Dollar General from here, though?
Yeah, so as I look forward for Dollar General, they've already incorporated the next rounds of tariffs within their guidance. And if you look at Dollar General, they import about 6% of their goods internationally. And my guess is China is right now about half that business. And they've already mitigated, I think, a good portion of that exposure. So we feel very good about Dollar General's ability to manage the tariffs. And, if you end up going to 25% tariffs in Tier 4 all the products, then, I think they will end up resorting to taking some pricing.
Who is more exposed in a bad way, Rupesh, in the space that you cover?
Yeah, so I think Dollar Tree would be more exposed. So they import a significantly higher amount of product from China. So I think if you go from 10 to 25, you would see a bigger impact. And the other key difference today and why Dollar Tree is down and Dollar General is up is Dollar Tree's guidance did not incorporate the impact of future tariffs.
Wow.
So, you look at the numbers out there, I think Dollar Tree, there's still a risk of negative earnings revisions.
Makes a lot of sense. Thank you, guys. Appreciate it. Rupesh Parikh and Lauren Thomas. Thanks very much. Coming up, did the Fed miss its chance to preemptively take a recession off the table? One of my next guests says yes. He's going to talk about what he thinks they should be doing next. Plus, they are paid to find the addresses of Airbnbs to help cities crack down on illegal short-term rentals. Airbnb says the company's hired use shady tactics that raise privacy concerns. We have that story coming up.
All right. Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Strength and things. Strength and things. Strength and things. Strength and things.
strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
At the Bank of Antandek, they're looking for a mascot.
We need an icon. Something that says high flying to all our mortgage customers.
Like a falcon or a stallion.
Or even better, a parrot. Check it out.
Meanwhile, at Santander, they're concentrating on helping customers find ways to take years off their mortgage with their overpayment calculator. See what's possible at Santander.
All applications are subject to status and our lending criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
I didn't choose you. You chose me. When you broke from the crowd and pawed at my knee, soon you'll be feeling right at home. You'll be a bit unsure, but you're free to roam. What's good to chew? What's nice to nibble? Wet food, dry food, tin food, kibble? You might sometimes be cheeky, not always wise, but I know I found love in those puppy dog eyes. Join the free VIP Puppy Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/puppy club or join in store. T's and C's apply.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Welcome back. Take a look at treasuries, which are on the move. We want to head straight down to the CME, where we just closed up a 7-year auction that saw really weak demand. So Rick Santelli is here with those details. Rick?
You know, they brought the 7-year back out in February of 09. On that auction, the first one, we had a bid to cover at 2.11. The next worst bid to cover was today at 2.16. This auction was really a dog. I gave it a D-. 246, the 10 auction average. We had 216, 50.2 on indirects, the worst since December of 15. The only thing even decent with this auction, it was still below average, was direct bidders a little over 16%. Dealers took a whopping 33.8, and here's the linchpin. The yield was 1.489 at the Dutch auction. The high in the when issued market was 1.47. Not only did we tailed into territory the when issued never even traded in. What does all that mean in English? D-. We brought the 10s to 2s back to unchanged. It's been -4 and -5. And not that I think that's so meaningful, but what it did was it threw a bit of selling wrench into a market that's been overbid with regard to yield. So we want to pay close attention for the rest of the day now that 113 billion of supply is in the rearview mirror.
You think it was the more hawkish talk from the ECB this afternoon, or why did yields just get too low, just too low?
Yeah, I think it was more the latter. I think yields have gotten to a point where they're low. There's questions as to really, does 97% quarter point really mean they have to deliver? Can the Fed push back at the market? There's a zillion questions, and when there's that many questions, investors usually pull back, and they did today in a big way at that auction.
Yeah, that's the worst mark I've seen from Rick in a long time, a D- for the 7-year. Thank you, Mr. Santelli. Let's get over to Contessa Brewer now for a CNBC News update. Contessa.
Hi there, Kelly. Here's what's happening right now. A 6.3 magnitude earthquake struck about 150 miles off the coast of Oregon this morning. The U.S. Geological Survey says no tsunami is expected from the underwater quake. No reports here of damage or injuries. Federal authorities announced charges this morning against a 20-year-old Ohio man who is accused of threatening a Jewish community center in a video. Police say James Reardon posted a video on Instagram earlier this month shooting a semi-automatic rifle. He's been charged with transmitting threatening communications via interstate commerce. A lawsuit has been filed on behalf of a West Virginia transgender man who's accusing an assistant principal of harassing him when he tried to use the boys' bathroom. The ACLU says the suit is a last resort, an effort to prevent the assistant principal from contacting the kid's family. And the number of people killed by drivers running red lights has hit a 10-year high, according to AAA. The latest figures from 2017 show 939 deaths, which is a 28% higher percentage than 2012. And AAA says it's not clear what's behind the increase, but notes there are more people driving more miles since the Great Recession. That's the CNBC News update this hour. I'll send it back to you, Kelly.
Yeah, and whether distracted driving plays a role in that
big
as
question.
well. Contessa, thanks very much. Contessa Brewer, here's what else is coming up on the exchange.
Ahead, Bitcoin's bizarre two-day fall. Wall Street even more bullish on Disney Plus than Disney. Jack Ma says we'll eventually see a 12-hour work week. And Rihanna continues to woo the venture capital world. That's ahead in Rapid Fire.
There's golf.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and...
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
I didn't choose you, you chose me. When you broke from the crowd and pawed at my knee, soon you'll be feeling right at home. You'll be a bit unsure, but you're free to roam. What's good to chew? What's nice to nibble? Wet food, dry food, tin food, kibble? You might sometimes be cheeky, not always wise, but I know I found love in those puppy dog eyes. Join the free VIP Puppy Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/puppy club or join in store. T's and C's apply.
For our half-price sale on a choice of floors and beds. For first-class free fitting, Carpet Right for life. Offers end Tuesday. Free fitting on selected carpets and vinyl with selected underlay. Minimum spend applies.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores, booking charge may apply. See online for full terms and conditions.
Everyone wants a smooth running home so that they can spend more time enjoying it. The British Gas app allows you to do just that, because with the touch of a finger, you can quickly submit meter readings or book an expert engineer, leaving you more time for watering the borders or a spot of sunbathing. Manage your home account and more, all in one place. Download the British Gas app from the App Store or Google Play today.
Vice President Mike Pence live at the Delivering Alpha Conference. Just one of the influential names at the most important investor event of the year. Go to deliveringalpha.com to reserve your spot now.
Welcome back. Let's catch you up on a couple stories that should be on your radar today. It is time for Rapid Fire. Here to break down the headlines are Seema Modi, Robert Frank, and Courtney Reagan. Welcome, one and all. And we want to talk some Bitcoin because this is sort of the headline that wasn't. Seema, we should be talking about it surging to new highs, right? I mean, it's a safe haven trade. Bonds are up, gold is up, but no, it dropped back below the $10,000 mark again, extending declines from yesterday. Granted, it's still up 150% for the year.
And that's the big story. If you speak to some of these exchanges that manage money for high net worth clients, they'll say big picture is still up 150% so far this year. I spoke to Michael Moore at Genesis Capital. He says there's no real news to speak of as to why Bitcoin has underperformed. He would just attribute it to normal volatility in the Bitcoin land. Yeah. I will say is that we have seen sort of this risk-off rally, right? The Dow up 340 points, now up 3.2% so far this week. So has that made some of these other assets less appealing for the week? I mean, silver did stage a major reversal today, as did gold.
I mean, I like it because people can't figure it out the way they can't figure out gold. Sometimes it seems like it rallies because it's, it's going up with financial assets, and other times, is it because it's an inflation hedge? Is it a hedge on real rates? The explanation seems to shift week to week and month to month.
Yeah, it had that run up when markets were really going crazy.
Right.
I and others thought it was sort of the safe haven trade where a lot of Chinese and others just said, look, the yuan's going down, maybe the pound's going down, let's put money into Bitcoin. But then it's just hard to figure out with
And
risk
if you
on,
go
risk
back
off.
to the original time when it crossed, did it ever cross 20,000 or did we just got close?
Right around 20,000, December of 2017.
Yes, that was at the top of the market. I mean,
Right.
people then were saying Bitcoin is a sign, it's an early tell for stocks, because stocks are
It is
rallying
correlated
then.
at that
Exactly.
point, yeah.
Now it's the complete opposite. I just think there's no, the answer is it's just in its own world.
Extremely volatile asset, or if you can even call it that. Actually, you can't call it that. But what the technical analysts are saying, if you want to call them that, is every 6 weeks you'll see some type of breakdown in Bitcoin, and so this is what it's experiencing right now.
All right. Well, moving on. A new report from UBS says 43% of U.S. consumers it surveyed plan to subscribe to Disney Plus. That's more than Disney itself has predicted. Disney has forecast somewhere between 20 and 30% of broadband households would be subscribers. Now, more than half of those who would sign up are telling UBS they would also cut at least one other service, pay TV being the first service they canceled, with other streaming services closely behind. We talked about Netflix's underperformance this year. You have to think they're worried. But I guess it's a reminder, the pie doesn't keep growing forever.
You have to think they're worried. And the most interesting thing about this was, look, we know Disney Plus is going to be very popular. You know, they're saying maybe 20 to 30 million in the U.S., 60 to 90 overseas. It's going to do great. Who are the losers? So what's interesting about this is that only 13% of respondents said they would have 3 or more streaming services. So 3 is the number. 3 is going to be the number of, like, how many of these services can people have? 3 is going to be the number. So you Amazon probably one. Netflix is probably
Really,
one.
think Amazon.
Those could be the 3.
Sure, yeah.
Netflix, Disney Plus, and a third.
What about Hulu?
NBC will definitely be the third.
NBC hasn't even launched yet.
It will be number 1. But let's say one of those 3. Then what happens to Apple Plus?
Right.
What happens to HBO now?
Facebook has its own offerings.
So all these other things, if it's 3, then there's only room for 3. That's where it's going to get
And that's
tough.
like most other industries. They ultimately consolidate to 3 or 4 major players. This one's probably going to be no different.
Yeah, it seems to make sense. If you're trying to cut the cord and get rid of your cable bill, how many subscription services are you going to want to pay for where you still feel like this is a worthwhile investment for my family and we're still saving money off of that pay TV subscription?
And you're still using it. I mean,
True.
how much can you watch?
Right. But Disney, I think, is obviously if you have a family with young children and they watch the same movies and cartoons over and over and over again, I see a lot of value in Disney for many, many U.S. consumers, perhaps more so than some of the
But
others.
you're saying
for those families.
you're not necessarily going to binge watch The Lion King 150 times.
I'm not.
That's because you don't live in my house.
Yeah.
We do that.
That's true. That's true.
Now this, if Jack Ma is right, you'll have plenty of time to stream The Lion King because while on stage with Elon Musk at an AI conference in Shanghai, the Alibaba executive chairman predicted that artificial intelligence should enable people to work for just 4 hours a day, 3 days a week. 12-hour work week sounds great, but this is the same guy who also endorses China's standard 12-hour work day, 6 days a week for the time being.
This was crazy to me, because he's talked about that 996,
Yes.
the 9 to 9, 6 days a week, and he endorsed that. And artificial intelligence, I think, I don't know, may make our lives more efficient, but will it really allow us to cut back and work less? No, isn't the point for it to make us more productive to do more?
I mean, I hope he's right.
Wouldn't that be great? But I don't think
Let's
it's true.
see if he is right. But I think the context here is also that China has been doubling down on its investment in artificial intelligence. It's really had that first mover advantage, whereas the U.S. is behind when it comes to innovation
You know why?
in
Because
AI.
China's going to run out of workers and the U.S. is not. So they got to figure out how can we get people down to a 12-hour. Well, although then maybe that goes the other way. But
Or
they
make
need the
robots
robots,
more
to step
effective,
up.
more
This
one way or
idea
the
that
other.
technology would allow us all this leisure time. In 1930, John Maynard Keynes wrote the book that said, by 2030, we'll only work 15 hours a week because we'll have so much time on our hands and all this abundance. Well, guess what? It had the opposite effect. We all work a lot more than we used to.
That's exactly my point.
So I don't know. Another prediction of leisure time, just not going to
Going out the window.
Yeah.
He also made the case that artificial intelligence will be a force for good. He says, I think because of AI, people will have more time to enjoy being human beings and dance and karaoke. So
Yeah, they can dance
clearly
with the
AI is
robots.
bringing the dance
Karaoke.
party.
This stuff is all neutral. It can be good, it can be bad. It's not. You can't decide now that it's going to be fine. And he's talking to Elon Musk, who foretells that they're like takeover of society. Anyway, let's go back to Rihanna. She has a lingerie line called, and I think it's pronounced Sauvage X Fenty. This line is now worth $70 million, reportedly, thanks to $50 million in fresh funding. The collection only launched in May of 2018. It's been steadily gaining market share on the likes of Victoria's Secret. We know how those shares have been doing lately. Robert, this is just one of her many investments. Why is this one in particular doing so well?
Well, she's got LVMH first with makeup, and then she's got now a truly new fashion house. First time they've done that in decades, and that's yet to launch. And she's now worth around estimated $600 million. This is a woman who a decade ago was bankrupt or nearly bankrupt. And it's just incredible how smart she's been about her fan base and what matters to her fan base and reaching into these segments in a way that the current leaders aren't. So Victoria's Secret is based on this model of woman that, rarely exists in the real world. And Rihanna said, look, I want to make lingerie for real women. And it's working.
Yeah.
And she's in touch with that fan and that fan base.
Where do you, I understand you can only buy this direct, right? This is not like going through stores. I mean, that's another interesting wrinkle in all of this, is it keeps reminding us that the disruption is coming outside of the traditional established players to their detriment.
And think about like Kylie Cosmetics that started online as well. It was powered by a Shopify website, and they were able to go direct to consumer first before they experimented with some brick and mortar. And I think that is also the power of a celebrity brand. Now, not all celebrity brands have staying power, right? Yes, you have The Honest Company from Jessica Alba and Goop from Gwyneth Paltrow, and that's been around for a while.
But they have plenty of their own controversy themselves for each of those.
Exactly. When we're talking about taking market share from Victoria's Secret, yes, of course it has to be taking market share from someone, and Victoria's Secret is definitely struggling, but they still are multi-billion dollars in sales every year. This is still relatively small, so just to put it all in
Victoria's
perspective.
Secret is, as they say, donating share to a lot of places.
Yes,
right now.
you've got Third Love and Adore Me and all of these other startups in the lingerie category, so I think this is sort of
I've never even heard of them. Are those direct?
Oh, you haven't? Yes. Yeah, this is all sort of ground that is up for the grabs. But also folks at Third Love will tell you, hey, it's actually pretty hard to make a really good bra. You have to work really, really hard at that. Yep. So I think also the product will speak for itself. And I haven't seen the product in person, so I can't really speak to it for Rihanna.
Since she has been pretty successful in this regard, why? I mean, is she doing something different? It reminds me, we were talking to Shaq yesterday, and he really thought a lot about, like, what do I want my brand to be? I want it to be fun. I want to partner with products that I like. I want it to be, what is Rihanna doing? Is it that authenticity, or is it the fact that she's going super high end?
From what I understand, and Courtney nailed it, I think part of it is just her pure reach, right? Her social media reach, which is the defining marketing characteristic now. But it's also that she really does launch products that, from a price point of view and from a value point of view and from what the consumers want, it's the right thing. And, it's not just her fan base. What she's been able to do is broaden that appeal to non-core Rihanna fans to just be a good product, whether it's the makeup or the lingerie. It's just good products.
She's not just this detached celebrity who's putting her name on a product. She's been gaining clout in the fashion world ever since 2015, partnering with Puma, then the perfume with Dior, fast forward to this year with LVMH, and now Fenty and this lingerie brand. So she's really been taking these innovative roles among different brands, and she's gaining a following.
Got to give her props.
Yeah, absolutely.
And you guys, thank you all very, very much. Seema, Robert, and Courtney on Rapid Fire today. Coming up, my next guest says the Fed has missed a chance to preemptively take recession risk off the table. He joins me to talk about that straight ahead.
Did you know that 4 out of...
At Romans, you can rent your next home from just £36, plus your first month's rent. No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply. The new Vauxhall Combo Cargo delivers for the heavy lifters with its payload of up to a ton, for the fuel savers with its highly efficient engines, and it delivers awards, including International Van of the Year 2019. New Combo Cargo carries British business from 168 a month with 6 years 0% APR. Vauxhall, British brand since 1903. Conditional sale, minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance, subject to status. 18 plus, small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Dad, I'm bored.
Why don't you go and start your holiday homework?
Don't worry, this summer we've got loads of exciting activity ideas to keep the kids entertained without even having to leave London. Make the most of the sunshine and go raise paper boats, pick wildflowers, or make a rocket pack out of a cereal box. Look online for Asda Tour de Fun for even more exciting activity ideas. Go discover your fun side with Asda.
Welcome back. Richmond Fed President Tom Barkin yesterday said he isn't convinced that low inflation warrants cutting interest rates further. My next guest would beg to differ. He says falling inflation is the elephant in the room and the Fed needs to pay more attention to it right now. Joining me is Lakshman Ashetin. He's co-founder and chief operating officer of ECRI. And what do you guys have a lot of proprietary gauges, and you actually think, well, we all think of inflation as a super long cycle thing, and you say no. It tends to move a lot more than that.
Yeah, it's cyclical. Look, there's cycles in the economy. There's the economic cycles in growth. We're in a slowdown that's been going on for the better part of a year. We're also in a separate inflation cycle downturn that began just over a year ago. Okay, that is the elephant in the room. You know,
can the Fed wait it out, even if they saw your tools and were showing your future inflation gauge there? It's definitely been falling since the end of last year.
Right.
Can the Fed just wait that out? Because some of the Goldman and other forecasts say it should move back up by the end of this year.
Well, you know, cycles turn. Cycles will turn. It'll eventually turn, but what happens between now and then? And when we look also separately around the world at leading inflation indicators, future inflation indicators around the world, it's not just a U.S. problem. It's part of this global slowdown that actually predated the trade war. And so there's a lot going on, which I think the Fed is a little wrong-footed on, playing catch-up on. And inflation is, undeniable that we're having this cyclical downturn in inflation, and it is not over. The same indicators that nailed the downturn that both the Fed and the bond market missed at the beginning of last fall, those indicators haven't turned up. So it's going to continue easing in front of us, and that is playing out in the bond market. I mean,
so
look at that.
Do you sort of say markets are right to push the Fed to cut rates a couple more times, or are we looking to the Fed to cure a problem that they can't really cure?
Well, to the extent that they're doing counter-cyclical policy, they're very late, right? Because the inflation cycle downturn was very evident last fall, and they maintained a tightening. They tightened actually two more times. And so some of our research, this is not definitive, but it's empirically kind of interesting that lagged time before they begin a rate cut is linked to higher recession risk. Now, quite separately, I think probably the most important thing, anytime you have a growth rate cycle downturn, you're moving toward recession risk, okay? This has been going on for a year.
But we've seen these sort of cyclical slowings in the past, 2016 being a good example. I mean, we've seen the economy slow and then speed up again.
Sure, we've had three actually since the last recession, 2010-11, 2012-13, 2015-16. And when you look at any of those times, the Fed tries to tighten and then the slowdown stops them in their tracks. And that's happening again, but it's happening when rates are actually quite low. And what's particularly interesting is that this time around, something that's a little different, there's a third cycle. We have a lot of other different cycles we're watching. There's a cycle in jobs growth and in the employment cycle. And our leading employment index, the growth rate there, is at its weakest reading in 10 years.
Is there any chance that's because there's a shortage of workers instead of a... are you're picking up sort of the cyclical downturn versus
this is a deceleration. So it's what's going to happen. Is the vector changing in growth?
Yeah.
And here in jobs growth, is the vector changing? Absolutely. So we're going to see a cyclical slowdown in jobs growth, which becomes very important when you think about like the bullish case, right? That there's no recession. If you're looking at that, it's very often, hey, jobs are solid, the consumer's solid. What are you worried about?
If you lose that underpinning.
And if you lose that underpinning, which I think is starting to slip, I'm not saying it's done, but it's starting to slip here, that's a real issue.
Ironically, that would make their rate cut job easier because they only really like to do it if they see evidence the economy is slowing.
In the rearview mirror.
In the rearview mirror, absolutely. That raises just one final thing I wanted to ask you about. This Bill Dudley column earlier in the week where he said, look, the Fed should let the president take his hits politically for this trade war if that's what's causing growth to slow down. How does that feed into everything that's going on here?
First, like everyone else has said, it's pretty shocking, right, that this is happening outside the room in public. And that's pretty different. Again, from a cyclical point of view, We think that the Fed has been wrong-footed both cyclically and structurally as to what's going on the last 10 years with this economy. And so here we are. They've got a recession. Why is it Armageddon? We've had 47 since 1790, and we've survived them all. Why is this one freaking everybody out so much?
Yields are already so low.
They're so low, so they're going to NERP, they're going to ZERP, they're going to QE. It reveals, it exposes that the Fed plan A is all they have. This lower rates, this QE, they don't have any plan B.
Right.
And I think that's where the freak out part comes from.
Lakshman, thanks, I think.
Well, hey, look, we're going to survive the 48th. It's not a done deal, but I think you've got to be on recession watch. We're slow walking towards some serious risk here.
All right, appreciate you joining me.
All right, thank you.
Lakshman Achutin. I just want to draw your attention to the markets right now. The S&P and the NASDAQ, I mean, they're shrugging this off. We're at session highs. The Dow just below that. They're up it's up 350 points. S&P's up 39 right now. The NASDAQ up 126. Here's a quick look at the transports on pace for their best day in nearly 7 weeks, up better than 2% today. And coming up, we have two very different takes on tariffs. Josh Lipton has the first.
Kelly, Apple's wearables could be hit by a 15% tariff on September 1st. A look at how much that could cost the company and potentially the consumer. Now to Ilan Mui over in Manhattan Beach, California.
Well, Josh, out here on the beach, surfboard makers are telling me that they are totally stoked about President Trump's new tariffs. I'm going to take you inside the famous Spider Shop workshop coming up next.
Through the AT&T network, live big and spend less on the brands you adore, and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
No. No. No.
What are you doing?
I don't like any of our preset radio stations. We need a new car.
With the Jaguar E-Pace at $299 a month on personal contract hire, you'll find a reason.
That's better. And it's a Jaguar.
Initial rental £3,588. 48-month term, subject to status. 8,000 miles per annum. Excess mileage and return conditions apply. No ownership option. Ends 30th of September. Participating retailers only. Jaguar contract hire.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
strings and things.
Dad, I'm bored.
Why don't you go and start your holiday homework?
Don't worry, we've teamed up with Disney to bring you loads of exciting activities to keep the kids entertained this summer without even having to leave London. Make the most of the sunshine. And go play pool games at your local swimming baths, inspired by Disney Pixar's Toy Story 4's Ducky. Yay! Look online for Asda Tour de Fun for even more exciting activity ideas. Go discover your fun side with Asda.
I didn't choose you, you chose me. When you broke from the crowd and pawed at my knee, soon you'll be feeling right at home. You'll be a bit unsure, but you're free to roam. What's good to chew? What's nice to nibble? Wet food, dry food, tin food, kibble? You might sometimes be cheeky, not always wise, but I know I found love in those puppy dog eyes. Join the free VIP Puppy Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/puppy club or join in store. T's and C's apply.
This summer at Chessington World of Adventures Resort, answer the call of the wild. With over 1,000 of the world's most amazing animals and over 40 of the wildest rides and attractions. Meet the Gruffalo and all your favourite characters at the Gruffalo Summer Party and so much more. Book early and save up to 40% at Chessington.com. It's Britain's wildest adventure for all the family.
Welcome back to the exchange. From wearables to surfboards, tariffs mean different things to different businesses. In fact, Josh Lipton is live in San Francisco with a look at Apple bracing for tariffs, while Ilan Mui is in Manhattan Beach with one business begging for them. Josh, you're first.
Kelly, Apple's Watch and AirPods could face a 15% tariff starting September 1st. Now, these products, of course, are a bright spot for the company. Apple has now sold an estimated 80 million watches and 50 million AirPods. Apple could absorb those tariffs entirely. Analysts estimate that could cost the company $500 million. Or Apple could try and pass along price increases to consumers. Now, some are more worried about possible tariffs hitting the iPhone on December 15th, though. If Apple is hit with all these potential tariffs, it could cost it about $5 billion, and that would be about 10% of the company's free cash flow. But Tim Cook, we know, seems to be on good terms with President Trump, who recently praised him as a great executive. Some are betting here that in the end, Apple won't be hit with tariffs, that it's going to earn exemptions because the U.S. government doesn't want to penalize such popular products. Kelly, back to you.
And at least they have deep enough pockets to deal with it either way, Josh. Thanks. So, Elon, you have a business that's hoping for these tariffs.
Well, that's right, Kelly. Out here on the beach, Trump's tariffs are certainly making waves, and that is exactly the break that legendary surfboard maker Dennis Jarvis has been waiting for.
I'm a proponent for as high as possible because then it becomes competitive for me.
So forget 15%, Kelly. He wants to take tariffs all the way up to 70% because he says that Chinese imports are undercutting his boards on quality and on price. Now, many of the novice surfers out here are probably using boards that have been made in China, but Jarvis's builds boards for celebrities like Patrick Swayze and like Taylor Swift. He's got a petition that's been signed by 100 domestic manufacturers and thousands of his customers. And he even made a special Make America Great Again surfboard in hopes of capturing President Trump's attention.
I don't have all the answers. I'm just trying to shake the tree and see what falls out and try to work with people that are compassionate about people that are losing their livelihoods and having to leave towns or even California to find work.
Kelly, he says this industry either needs higher tariffs or federal subsidies. The alternative, he says, is wipeout. Back over to you.
Would he get hurt in any way, Elon? If just thinking about cost of goods in general, or I guess everyone, if the whole economy slows down.
Well, that's the interesting part about this, Kelly, is that he actually not only makes surfboards, he also has 3 retail surf shops that sell many products that are imported from China. So he is potentially facing paying these tariffs, but he says that building the surfboards, that is the nucleus of this entire industry, of an entire culture. And if that dies out here on the beach, the entire culture could go away.
Wow, that is fascinating. Thank you guys both. Appreciate it very much. Elon Moy and Josh Lipton today. Coming up, you can call it the Airbnb police, sort of. How the rise of the home rental business has also given rise to a new profession, tracking down the homes that are renting them illegally. That story is next.
Do you have concerns about...
Live big and spend less on the brands you adore and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way and give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and...
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Dad, I'm bored.
Why don't you help me hang the washing up?
Don't worry, we've teamed up with Disney to bring you loads of exciting activities to keep the kids entertained this summer without even having to leave London. Make the most of the sunshine and go play pool games at your local swimming baths, inspired by Disney Pixar's Toy Story 4's Ducky.
Yay!
Look online for Asda Tour de Fun for even more exciting activity ideas. Go discover your fun side with Asda.
For our our half-price sale on a choice of floors and beds. For first-class free fitting, Carpet Right for life. Offers end Tuesday. Free fitting on selected carpets and vinyl with selected underlay. Minimum spend applies.
I didn't choose you. You chose me. When you broke from the crowd and pawed at my knee, soon you'll be feeling right at home. You'll be a bit unsure, but you're free to roam. What's good to chew? What's nice to nibble? Wet food, dry food, tin food, kibble? You might sometimes be cheeky, not always wise, but I know I found love in those puppy dog eyes. Join the free VIP Puppy Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/puppy club or join in store. T's and C's apply.
Everyone wants a smooth running home so that they can spend more time enjoying it. The British Gas app allows you to do just that, because with a touch of a finger, you could quickly pay your bill or book in a boiler service, leaving you more time to fire up the barbecue or just relax with a good book. Manage your home account and more all in one place. Download the British Gas app from the App Store or Google Play today.
Airbnb is one of the most highly anticipated companies coming down the IPO pipeline, but the platform is still running into problems with short-term rental regulations. In fact, there is a budding industry of companies policing Airbnb listings. Vice reporting that cities are enlisting the services of contractors to expose Airbnb addresses that are violating local laws at the cost of people's privacy. Joining me now is Vice Motherboard reporter Joseph Cox with this story. And basically, to use a term, people are being paid to dox folks, right, to out their addresses and share them with local authorities. Is that right?
Yeah, so there are these companies, and they'll say that they have a high-tech solution for finding the real address of an Airbnb, and then they can give that to authorities. But what we found from leaked documents and videos and chat logs was that for at least one of these companies, it's actually contractors who are working at home, and they're being paid $2 per address, sometimes more depending on how hard it is to find. But there are ordinary people who have to then find these addresses, yeah.
One of those companies that you're talking about is called Host Compliance. It's a platform based on Amazon's Mechanical Turk marketplace, and that's a place where, as you've said, there's a lot of this kind of work happening that it feels a little scruffy. I don't know how else to put it. Is it illegal, this behavior?
No, it's not illegal. I just don't think that many people would necessarily be aware that there is sort of this hidden workforce that is being hired to find addresses like this. The company, when I spoke to them, Host Compliance, as you say, they did say that they are transparent with customers about how this information is obtained. But when I spoke to a customer myself, they had no idea it was actually humans going through and doing this. And it is public information, you know, they'll look up in digital phone books and maybe Facebook profiles and that sort of thing. But it's still a little bit unsettling in a sort of, you know, post-Cambridge Analytica, post-Facebook privacy world. Right. Some people just don't know this is happening.
And an Airbnb spokesperson told you that it is concerning to see rogue third-party sites using shady tactics to unearth private user information and sell it to cities. Is there more that Airbnb can or should do here?
Yeah, so of course, with an Airbnb statement, you have to bear in mind that they don't appreciate any sort of industry coming in and sort of, you know, messing with their business. Airbnb here, though, is clearly not fulfilling all of its roles or obligations because this industry is now coming up in the first place, right? If Airbnb was perhaps more forthcoming with government regulators or local bodies, this industry wouldn't need to exist at all. So there's clearly a gap in the market that these people are fulfilling, even if it can be in a sort of, you know, surreptitious way.
And why do you think some of these top cities where this is happening are Pasadena, Napa, Fort Lauderdale, Virginia Beach?
Yeah, I mean, any of these areas are going, and across the United States, are going to have their own regulations and their own